Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone. Thanks for joining us on the Smart Property Investment Show. It's good to have you on board as we sort of navigate this crazy world of property, which is something which is attracting a lot of media attention at the moment. It's attracting attention no matter where you go. I don't know how many barbecues I go to. I don't really go to that many, but or dinner parties, which I also don't go to too many. But whenever I do, the first question anyone asks me, they go, "Phil, what's going on with property markets?" And my response is, firstly, to listen to the Smart Property Investment Show, where you can get all the information you need. But I say that in jest. I'm not too sure. I'm very fortunate in the job that I do, where I've got an old-fashioned term, a Rolodex of business cards of people from right across the property ecosystem. So I'm very fortunate I get to give them a call and ask them what's going on. And I use that very much as a way in which I can shape my attitude towards property at any given time and help shape my strategy as I sort of embark on this journey of creating wealth through property. I share our own portfolio considerably, and I'm happy to do that. And if you go and check out smartpropertyinvestment.com.au, you can see where we're at with our portfolio at any given time. But I say a crazy property market. I think there'll be a lot of people out there who will tell me, "Phil, it's not a crazy property market. It just is the property market, and we're just at one point of our cycle." Many buyers agents and other associated professionals I discuss this with saying, yes, look, there's always going to be like this. We've been planning for it for many, many years. And if you've been in property for quite a long time, you know that there is always a cyclical nature of property and property investment. And today's market is very, very normal. And I completely subscribe to that, and I believe in that. And what I'm doing right now as a property investor is making sure that I am getting the right information I need to approach buying moving forward. And the read I have on the market, the information I'm getting from people I know, trust and respect is they're telling me, be patient, bide your time, ensure you keep your portfolio ticking away from a cash management perspective, but there's going to be some good opportunities moving forward, in particular, the Melbourne and Sydney markets. And to help me sort of have a discussion around the Sydney market in particular, I've asked Meredith O'Reilly onto the show today. She's from Home Finder Sydney. She's a buyer's agent. She's also has been running this business for 5 or 6 years. Meredith, how you going? How's things?
Things are very good. They're essentially a little quieter than they were in the previous couple of years, and it was pretty frantic as people had a sense of fear of missing out, desperation. But at the moment, I'm finding that the first home buyers are slowly thinking about, yes, we probably really should do something now, and that would be my advice to them as well. And of course, the lending practices have become much tighter with the Royal Commission, etc. So my first advice would be to people who are even thinking of either investing or buying their first home is get your finances sorted now. Because even if you think, oh, well, I might wait a few months to start looking, or that can take some time, longer than people usually think. There's a lot of ducks to line up. I'm seeing, of course, the price drop. It's very evident in the first waves of emails that have come through to me in the last week as everyone's got back to work. The sales agents are actually sending me properties that were still on the market last year. Here's the big price drop in this one now. Here's the price drop in this one. And I think the sellers are nervous. And so therefore, obviously, it's a buyer's market. So it's a really great time to think about getting into the market. And getting back to what you said about, maybe putting something away now that will grow with its capital growth, obviously, over time. Some interesting ones have come into me lately. I buy a lot in the inner west of Sydney. The little old derelict houses. If you're someone with building smarts, or you know someone with building smarts will do you a good deal, there are some great little Dero houses that are going for so much cheaper than last year. They were all $1 million plus, no kitchen, no anything. Where would you start with that? You'd have to have a fair bit of capital or time up your sleeve. But a couple have come in today in the 800s, and I've thought, wow, that's a really good deal. A little workers' cottage, a cute little spot in Newtown. If you could get into something like that, if you didn't have to live in it immediately,
And these are the opportunities, I think, in the market right now, and being a buyer's market. We're firmly in a buyer's market, at least in Sydney, and it's definitely transitioning that, or it's there in some parts of the Melbourne market. And we've discussed it a lot on the show recently. So go back and listen to all this. There's hundreds of podcasts around this. You can, all the information you need. But just quickly before I go there, so Home Finder Sydney, tell us a bit about your business. You're more owner occupier, the investor, or a bit of both, but you only buy in the city market, just to help give our our listeners and myself, because we've only just met, some context about the sort of breadth of what you do?
Yeah, sure. Unlike a lot of buyer's agents, I actually started in sales, briefly in sales. I did it for about 10 months, and I'd always wanted to be a buyer's agent, but it was such a new thing when I became an agent in 2009. People really were just getting their head around what is a buyer's agent, and I must say, even to this day, people still don't really know what it is. After I'd done sales for a while, I thought it's really good to know that side of the business, because you're going to be negotiating with sales agents your whole career, and it's great to know what their best interests are, their vendors, who they're looking after, and the sort of pressures they're under from their principal and people around them. And so you can really, see the stress load on a sales agent sometimes and try to make their job a bit easier. So when I finally became a buyer's agent, it was with a wonderful woman called Jackie Parker at House Search Australia. She mentored me and I stayed with her for 3 years. And then I said, Jackie, I think I'd like to go out on my own. She said, you are absolutely ready. So 2012, I set up my own business, Home Finder Sydney. And I've been so blessed that ever since I started, I haven't really had to look for clients. They've come to me. I've got a website, homefindersydney.com.au, but somehow people tell their friends and they use me and they have such a nice experience, and we go for coffee and we hang out, and, the process starts gently like that, and then we get into it. And mostly it's time poor people, whether they're investors or owner-occupiers, and they are busy professionals. They just don't have the time to look at the rubbish properties, but I do. And it's very much a boutique business. I never have more than, ideally 2 clients at a time, sometimes as few as 1, depending what else is going on in my life. I'm a mother, but my kids are bigger now, so that's all right. And yeah, I've just mainly bought in the inner west market, lower North Shore, upper North Shore, as far north as Newcastle and East Gosford, basically wherever the client wants to go if I'm happy enough to drive that far. And so I just take the stress out of it for busy people. And it's usually been, in fact, it's always been a fantastic experience for us both. And also in a way, because the agency's so small, I don't have to take on every client that comes to me. If I desperately needed the money, yeah, maybe, but I can actually choose someone that I know I'm going to be able to work with as a team, who's going to trust me, who's going to believe the guidance that I give them in terms of good areas and opportunities in the market, but who also is going to be easy to communicate with, get on with, and we just want to make it a happy experience for everyone too.
You mentioned first-home buyers, potential opportunities for them in this current market, and I don't disagree with you. I'd be interested in your views on something which I've been thinking about lately, and that is everyone's now saying how affordable Sydney is because of price drops of 10%, potentially 20%. Everyone's going, so affordable. And I sit there and I think, okay, 3 years ago, people were saying how unaffordable it is. Now, prices today are still higher than what they were 3 years ago. But now Sydney's a really affordable market and everyone's got all this money to get into the market. I just don't really subscribe to it personally, this whole context of affordability. Just because prices have come off 10% means Sydney's really affordable right now. If you couldn't secure your dream home 4 years ago in Sydney, and when you could secure the finance, I can't see how you can do it today. So, what's your views on this psychology of first home buyers or even upgraders around the affordability of city market? Are you seeing that, or is it still hard? It's still difficult to get in.
I think Sydney's appalling. It's so expensive, and you have to guide people in. Well, it probably won't be your dream home now,
or forever home.
Or forever home. Think of the common turnover is about 7 years, and if you can only afford a 1-bedroom unit, buy the best 1-bedroom unit you can in a great area. There's lots of great burgeoning areas, preferably not one that's got a million new builds coming on. And you just get your toe in, because it's not easy. It's a terribly hard market, and 'twas ever so. And certainly when I started out in sales, it was the GFC still happening, and people had big homes on the upper North Shore that they were not able to sell at what they thought they were worth because the price had crashed. And at that point, it was a much bigger fall than we're experiencing now. I still think Sydney is a great place to invest if you can get in. But if you can't, then spread your wings a bit. I actually bought a little house in Orange some years ago, and that's ticked over beautifully. I could have bought a 1-bedroom studio in Sydney myself. I probably should have in retrospect. But the little house I bought in Orange has just come along in leaps and bounds. And, yes, the Luxaflex factory closed not long after I bought it. And I thought, oh dear. But then something else opened, and then the educational opportunities. And, of course, it's a tree change city, very foodie, very winey. So, those other satellite cities, although Orange isn't really a satellite, but there are those other markets that are still very much growing, and when people can't afford Sydney, where are they going to go? We'll look at those markets and see how you go there.
You mentioned inner city of Sydney as places which you think represent good buying at the moment. I imagine you're talking everywhere along that train line out to Strathfield, right? Like Stanmore, Petersham,
Definitely.
Erskineville, challenging my geography here. I think I've done pretty well there. What else do you like in Sydney?
You see, I've discovered a new pocket, and I think it's the next potential area because I was so taken with it, I bought a house there to live in.
Okay.
So Bardwell Park.
Bardwell Park.
I had never been there, and I've lived in Sydney my whole life.
I don't know where that is.
You go Earlwood, Marrickville, Bardwell Park.
Okay.
Then there's a train station, Bardwell Park Station. It's on the airport line. So you go domestic, international. I think it's Torella or Walleye Creek. I always get them mixed up. Bardwell Park. So it's 20 minutes to Central. And it's leafy and green, so it's like the Lower North Shore in that sort of vibe, and without the price tag. And there's a lot of very nice property there. Houses, small townhouse developments, not really any high-rise to speak of, but really it's that quiet, leafy green, and then you're right near Marrickville and all the grooviness of that. You've got the Cooks River to walk along. So that would be my suggestion to anyone, because I was totally smitten and bought a house there.
For to live in or to invest in?
To live in.
To live in.
Yeah, or to invest in, either or, because the rent was comparable with a one-bedroom place I had in North Sydney that had water views and everything. The rent for what I would get for my place would be comparable, and the mortgage is less. So, yeah, I think that's one area I would think of. But the inner west has always been strong for the whole time I've been in property. It's just the lifestyle thing, the cafes, the theatres and this and that. Other than that, I do think that Georges River sort of area is undercapitalised still, potentially. Yeah. And as long as you can get near a train, I do think heavy rail or the new light rail or the metro is always gold. Especially if you've got kids or someone that needs to commute to the city, or you are a city commuter, you've just got to have that transport link. And buses are okay, but buses will never be what trains and light rail are.
And the view of using a buyer's agent to secure a forever home or an owner-occupier home versus using a buyer's agent for investment, how do you go about applying different principles for different clients around that? And I think the majority of your stuff sounds like, or traditionally has been, owner-occupied stuff. Are you able to sort of straddle both types of asset purchases seamlessly and easily? And
definitely.
What metrics do you use on the investment side?
So one of my clients that have come back to me a couple of times, actually, but the first place they bought was Crown Street near the corner of Oxford Street. Okay. And you would think, wow, who's going to live there? Well, I'll tell you who's going to live there. The people that have never left it empty live there. Yeah. Sort of inner city groovers.
I would imagine Crown and Oxford would be a very attractive
and it was
rental demand.
Correct.
Yeah.
And it was just enough back from the main intersection that it wasn't too noisy. And of course, after that, Crown became two-way. Crown became leafier. So even though they're near the corner, it's a better prospect. They've said to me over and over that first investment with you is just gold. So you just think, what's a property that's never going to be empty? Whether it's a family home, some people still prefer to buy a property that is going to be a family home for someone, or they just want to buy a studio or a one-bedder. You just look at where that employment growth is, where the lifestyle benefits. So obviously a place like Surrey Hills and around those areas, always, always, always. Also CBD is quite good. If you can find something in the CBD with low stratas, not easy, but if you can find those lower stratas, then I think CBD is still on the up and up once the light rail opens and once the metro opens. I think investing is just go where the action is. You don't necessarily want to buy somewhere leafy and quiet. You want to go where the action is with your investment property.
What's your views of off-the-plan new development builds, considering the fallout of this Opal Tower debacle and greater oversight on the appropriateness and quality of new buildings. I think everyone's concerned about it right now. There's a big backlash going on around off-the-plan stuff, and that is not only from a quality of the product, but also from a shifting, changing market. There's a lot of people who are very concerned about the completion of some of these apartment blocks going up right now that they've signed up to at the peak of the market, which are probably going to be in negative equity, some of them upwards of 20+%. A lot of people about to get their hands very, very burned. What's your thoughts on sort of off-the-plan market in Sydney at the moment?
I have strong thoughts, which are I've never been a fan. I would never advise a client to buy off the plan. It's happened time and time again to friends of mine, colleagues of mine, that they've bought something off the plan, either for themselves or a client, and the delay, which always costs money, costs everyone money. If the person is hoping to move into it, then they're stuck renting or they're stuck living with mum and dad that long time, that further amount of months, years, whatever. I mean, they blow out. And now that they'll be being scrutinised more, as they rightly should be, for quality of build, the potential for cost delays and for completion delays will be even greater, I believe. I'm just not a fan. I prefer to see the product, to see the builder's work, even if it's only a year old, as long as it's got people living in it and you're getting the vibe.
Secondary market for off the plan is fine.
They're great.
And often that's when you can get the biggest discounts because someone's got into it, they're under stress and pressure.
Yep.
You get a year or two of letting the property equalise to the market. And I know some people who've done very well on the secondary market off the plan very, very quickly after completion or occupancy.
Correct, and it's still under builder's warranty, and you get yourself on that owners committee as soon as you can, and get the vibe of what's going on, how the builder is, and be really involved in your building is something I would always recommend to investors. Don't just be hands off, set and forget. Just actually take part in all of those meetings, and so you know where your money is going as an investor. But no, I definitely think if a building's a year or even 2 years old, it's still got that new feel, and but it's still under the builder's warranty, and you know what's going on when you buy into that very quickly.
We're very fortunate we're recording this from Sydney, and I apologise if this is Sydney-centric, but my argument against that is that it's the biggest real estate market in Australia. Well, Melbourne's catching up pretty quickly, so it is going to be a bit Sydney-centric this time. But this question, irrespective of where you are, the same applications apply. We're fortunate in Sydney that we can't build forever. We are ring-fenced with mountains, the Hawkesbury River and the National Park. It's a big, the metropolitan Cumberland Plain of Sydney is massive, and it's going to be able to sustain many, many more dwellings moving forward. But when you look at new infrastructure build, and I think of the light rail out through the northwest and with Badgerys Creek, the emerging Badgery Creek precinct, and infrastructure to support that, there's a lot of new developments going in out that way, and very large subdivisions and new suburbs are getting created. And, you could say, well, it's not dissimilar from off-the-plan purchase, that you're securing a block of land and building a house on it, and supply and demand may influence property markets moving forward. What's your views from a Sydney-centric perspective of these new suburb developments out in the fringes of Sydney? At the moment, the fringes of Sydney, they'll soon get more developed. But would you be recommending people secure assets from an investment perspective out in those new areas?
Well, Badgerys Creek looks like it's finally going to happen after so many decades, most of my adult life, being talked about. I would have thought that would have been a smart proposition, as long as the infrastructure for schools, for trees, for all the things that are so important. I mean, we hear so much lately about the climate costs out in the western suburbs, where people haven't put in enough parks and trees, etc. So they're 10 degrees hotter than people in the inner ring of Sydney, which is just not fair and not sustainable. I would say that maybe watch that space a little longer. Just make sure that the infrastructure and everything is going to be ready when your property's ready, and that the forward planning is really going into that, and that it's not going to end up with more and more satellite suburbs that are not serviced by good transport, etc., or that the transport links themselves are not going to be finished for 10, 20, 30 years. Meanwhile, you've already wanted to resell that property. So again, I think that's maybe something to a little bit watch that space and see how it's going.
There's a lot of noise in the market, and you see them advertising everywhere, people who are selling off the plan, house and land development. So you buy a block and you build your dream home. And I know a lot of investors who have been caught up in these cycles, not in Sydney, but I'm thinking of Ipswich Way in Queensland and or Brisbane, and down in Melbourne where they get sold on the proposition of a great asset, a great investment asset being a new build, an area where families want to be, dual turnkey type properties where you have a granny flat or a like a one-bedroom apartment actually built within the actual physical infrastructure. And a lot of these people, they sign up for it, and much like an office-plan apartment, there's delays, there's problems with builders, there's weather delays, there's all these other reasons why you've got to hold the asset longer and you can't generate income and stuff like that. Your sort of perception towards house and land stuff in general, irrespective of where it is it a good asset? Is it a bad asset? Is it a different asset? Is it all come down to the correct research of it's more about location than the product itself? How do you balance those things up?
I would say yes, location. But it's tricky. I mean, if you're a young family buying your first home, you can't buy in the inner ring of Sydney, particularly, outside of Sydney listeners. It's just not tenable, even with 2 good wages and even assuming you get the loan. It's very, 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 very expensive, which is why I say maybe you need to invest in that slightly smaller property first off. I would say house and land packages, well, obviously someone has to buy them, but from an investment point of view, I'm not really buying it, and in terms of, again, not something I would necessarily recommend to my clients because of that time delay, cost blowout, the lack potentially of infrastructure that's ready when your property might be finally ready.
And you mentioned that you're quite au fait with the inner suburbs of Sydney, that belt, I guess, along Parramatta Road and the train line, and probably 5 k's either side of it. What's the culture? What's the dynamics of a knockdown rebuild in those areas right now? Is that something where you're seeing a lot more of it? Because you see a lot of established places in Sydney and probably outside of that belt, like your Toongabbies or Winston Hills or those type of areas, your Northmeads, where a lot of people are now knocking down red bricks and building their dream home, and they're moving there for location. Is that happening in the inner suburbs, or people typically like to keep the character of these workers' cottages or terrace housing?
It's a real mix. People do like to keep the character, and obviously the land size is very restrictive in a lot of these tiny, tiny blocks. But they do also want to go up and expand. So you're getting quite tasteful renovations. But what I have noticed around the newer area that I've moved to now, the Bardwell Park, sort of around Arncliffe and all of those sorts of areas, there is a lot of knockdown rebuild and a lot of knockdown of small homes on bigger blocks and townhouses going in, duplexes, and those would seem to me to be a very smart investment, a very smart thing to do if you were a builder investor. Way to go, get a big block and whack 2 or 3 or more properties on, so long as they've each got bit of their own space, because I like people to have a nice living aesthetic. But the knockdown rebuild thing isn't so big. And often there are restrictions, as you would know, heritage listings and all that kind of thing. But mostly it's to keep the character of the area. But certainly in those suburbs that are coming along, like your Arncliffes, your Torellas, etc., there's still room for a potential McMansion or whatever.
Well, there is, and there where a lot of the competition is right now for buyers, investment assets which have a considerable upside, and that might be, a dated house on a large block, and this is when your developers come in, and also your sophisticated investors who are comfortable with taking on a townhouse build of 2, 3, 4 blocks, and moving into this next cycle of the Sydney market as the density of these inner rings become higher. There's going to be more and more people competing for those attractive blocks. Even if they don't develop them themselves, they're thinking about, as an investor, that secondary market of, at a point in time, if you sell one of them to a developer, you can do quite well out of it. Are you getting sort of those briefs from your clients saying, find us stuff like this? Is this sort of front and centre with them?
Not so much, but it's early 2019. I would expect there'll be at least 1 or 2 inquiries along that. I've had people ask me if I can find them something to pop a nursing home on.
Okay.
That was a bit of a tricky brief because, it needs to be a decent land size, but again, they want that infrastructure. But I would think that there will be more and more of those. I mean, typically the boomers who are thinking, okay, all right, well, we've got our super funds sitting there, and we might think about how we might best use some of the funds there. And I would expect to have more of those. And in some of these suburbs that I've talked about, like your Arncliffes, your Torella, around there, they're quite nice green belts around them. So you can pop in some townhouses townhouses or some low-density housing, and people will still have that quality lifestyle that everyone is after, where they feel like they're still connected to the groovier parts of the city, no matter their age, but they've got trees and the Cooks River or nice parklands around the bottom of Haberfield, that kind of thing. So, I would expect that there'll be some of those inquiries, but they're definitely not front and centre.
Not yet. And I'm quite interested in and I'll sort of round out with this, we're sort of going quite a long time, but as a buyer's agent, I know many buyer's agents, and I sort of chat with them a lot. There's some commonality between all buyer's agents, and most buyer's agents will also have their uniqueness. But one of the key attributes of I feel of buyer's agents is their relationship with real estate agents. Right, you want to be using a buyer's agent to be getting the stuff that normal ma and pa investors who don't use buyer's agents don't get. So off market purchases. One of the key indicators to me of changing markets is whether buyers agents are getting more phone calls than what they're making. So buyers agents who are hassling real estate agents and never getting their phone calls returned says to me that it's a seller's market, and real estate agents will typically try and just get stuff shifted quickly for as much as possible, and therefore there is not that level of desperation where they need buyers agents to help them move their stock. In Sydney and Melbourne, that's turned on its head, and one of the questions I ask buyer's agent, the question to you, Meredith, is are you getting a lot more phone calls from real estate agents now than what you have done traditionally? And what's their level of stress and pressure to shift these assets? Are they hurting at the moment?
I would say it's a mix. First of all, those phone calls started, I would say, about October last year. There started to be much more activity from the sales agents, really ringing me. How did you go with that one? What did your client think? Well, I told you on the day, no, it wasn't quite right yet, but just checking up on that. So that's an indicator to me that definitely a buyer's market already back then. And now there's a huge volume of stuff, would seem to me like really a lot has come on in the last week in the market. So that's good. So they're getting quite good initial turnouts to their opens, but that might rapidly drop off as people then are still trying to determine, am I going to do this now? Am I not going to do this as a buyer? I do think the phone will start to just run hot from next week because I'm getting such a volume over my desk, and already some off-market things have come on. I do think that there'll be definitely the chase will be on this year. And I've been through those years where there wasn't, and you couldn't get an agent to call you back. And so they would go on my naughty and nice list like Santa, like the ones that really made an effort in boom times and the ones that totally didn't care.
So the question then is, how do you know you're getting a good deal in this market today?
I guess just do your research. You've really got to do your research. You've got to be across what's hot, what's not, what the local infrastructures are that are coming on, get in touch with your local councils, et cetera, et cetera. All that is in the background research that I do for my clients, depending what area they think they might want to buy in, and then I might suggest they move 1 or 2 suburbs slightly to the right of that or something like that. So it's just research and look at obviously the recent sales, the local sales. And also, is there much for sale in that area? That can be a good indicator too.
There is a lot, and we write a lot about this on smartpropertyinvestment.com.au, so go and check it out, how to buy effectively in a buyer's market. And there is definitely some skills, tactics and tips, but also traps in that regards. Meredith, look, I've really enjoyed the chat. Thanks for coming in and letting us know what's going on in Sydney. And I guess to bookend my original remarks, I personally am very excited about the Sydney and Melbourne markets moving forward. Depend where you choose to get your information. You're going to read a lot of doom and gloom stuff, and that's fair enough. And I think there's a lot to be concerned about in the current markets. But with the right education, the right strategy, the right research, I think there's going to be some very good buying opportunities coming forward in Sydney and Melbourne. And I'll be ready to go myself, and I'm happy to share with you what I'm doing. So thanks again, Meredith. It's been a good discussion. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so you're the first to know what's going on in property and property investment, smartpropertyinvestment.com.au/subscribe. And if you're a social media person, just search Smart Property HQ across all different platforms. You'll find us and like us, and keep abreast with what's going on. If you're enjoying these chats on podcasts, just press the subscribe button wherever you're listening to this right now, and it means that every new episode as it comes online, you'll make sure you'll get your copy of it. Any questions at all about the podcast, or even Meredith today, editor at smartpropertyinvestment.com.au is the email that you need to know. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.